Day, afternoon, or early morning, depending on where you are. I'm coming to you guys early morning from San Francisco. Gorgeous here. Was just walking around outside. It's beautiful. Always love coming here. I really enjoy this city, and I always forget to bring a jacket, all right, because for some reason, I don't know what it is here. As soon as the sun goes down, it gets freaking cold. I mean, it's just crazy. And you just don't think of that. Well, I mean, I'm in Texas, right? So when I leave, it's like, 85 degrees, humid, and getting hotter by the day. And I get here, and it's like 40 at night. I swear. I was like, good grief, it's cold here. But beautiful scenery, great people, great group of people here in class. Coming to you guys live from San Francisco, where we're doing the Next Step event. And all I've got to say is you should be here. And let's see. Drea, hello. How are you? Drea says, after Next Step, what do most people do education-wise for the next level? So the next step, right? A good question there on what you go to your Next Step event, what do you do there, and then what do you do from there? So at the Next Step event, Drea, what we do is we actually customize the education to whatever it is that you want to learn. That's something that I'm doing right now, hanging out here in San Francisco. Very first, I would say 30 to 40 minutes of class, I do nothing but get to know you, right? Find out a little about you, find out what your goals are, where you are in your trading, where you want to be in your trading, and then we customize the education at the Next Step for you to try to help you reach those goals. And most of the people that come to a Next Step event get enrolled in either the Morning Lab, Marquet's Trader Talk, maybe Rob's E-mini Trader Talks, some sort of continuing education, so that you have that continuous flow of information that you just can't get anywhere else. So that's where most of them go. Guys, let's go ahead and knock out the disclaimer here so that everybody knows why we're here. Understand that neither BetterTrades nor any of its personnel, that would be Marquet and I, are registered broker-dealers or investment advisors. Understand that we will mention that we consider certain securities or positions to be good candidates for the types of strategies we're discussing or illustrating. Just because we consider a security or position to be appropriate to the discussion or illustration purposes does not mean that I am or that we are telling you to trade the strategy or security. Keep in mind that we are not providing you with recommendations or personalized advice of any kind about your trading activities, and that the information we're providing is not tailored to any individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any security, or a suggestion that it is suitable for any specific person. Keep in mind also that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that may be intended to limit risk. Also, BetterTrades personnel, Marquet and I, are not subject to trading restrictions. I and Marquet and others could have a position at a security at any time. All right. Drea, we used to do that, didn't work out well, right? Too distracting, not a lot of focusing on what was going on in class. She's asking, have you ever considered having open forum where the students can talk to each other? We used to do that. It was a freaking nightmare, all right, because what did we end up with? Right, you guys got to understand, I mean, there's a whole list of questions here, right? I mean, you guys have been in class for like 5 minutes, and I've already got close to 20 questions from folks on different things. Well, you add in there, talking to your friends about the Tupperware party you had last night. Somebody else talking about, their experience in Vegas and they woke up on a roof. Somebody else talking about they, just sold their car. And I can't sort through any of it because y'all talking about everything but trading. So now we just make the questions kind of a two-way street. You ask them. I'll answer them, and then I ask you, and you answer them, right? And so that's how that works instead of having a 10-way street going on there, which is what we had before, and it was, like I said, not very, it was a pain, all right? I'm just going to be honest with you, it was a pain. All right, so that's what we got going on there. Let me go ahead and go over, and let's take a look at the markets here, guys. We've had some really interesting activity in the market here this morning. Nice sell-off. If you watch CNBC, you'd think it's the end of the freaking world, all right? I mean, those guys this morning, it was cracking me up. They were going, today, with the futures being down as much as they are, represents the worst 2-day sell-off we've had in 3 days. I'm not kidding you. I mean, it was literally, it wasn't quite that bad, but they were talking about this is the worst 2-day sell-off that we've had, going all the way back. I mean, if you look, it's all the way back to here. Well, what happened here? Last time we had a 2-day sell-off that was as quote unquote, here I'm doing air quotes, look, you guys can't see. Actually, you can. Hold on a second. Where'd it go? Can you guys see me? I don't know if you guys can see me or not. Went away? Okay, how about now? There you can see that. That was the wrong button. Operator. It's the one that looks like a camera. Ha! There I am. Freak you guys out, huh? You guys aren't used to it. Usually when I do this, you guys see me and I'm in like t-shirt flip-flops, right? Because that's how I am in my office. I got to dress up when I do these live events. So now you guys can see me. There I am. Everybody's happy with that. So yeah, you guys can see what I'm doing there. So this worst 2-day drop that we've seen there, now you've seen it. I'm shutting that off. That's enough. Y'all know that's freaking people out and stuff, children running and crying. Worst 2-day drop that we've seen going all the way back. Well, what happened on that last worst 2-day drop? What happened the last time we had one of these worst 2-day drops in history of, you know, like the last month? What happened to the market? After that 2-day pullback, what did the market do? Ripped higher, went higher for 1, 2, 3, 4, 5 days. That's kind of interesting. And then it pulled back for how long? A day. Then it went higher for 1, 2, 3 days. And then it pulled back for how long? 1, 2. Well, immediately after that, what did the market do? Went higher for 1, 2, 3, 4. You know what? It's almost like I think I've heard this before. That the market and stocks tend to trend in the, or move in the direction of a trend for 3 to 5 days before they retrace for 1 to 3 days. And that's what this market has been doing. And then today we get a 2-day pullback. And if you watch CNBC, you'd think it's the end of the freaking world. Oh my God, it's the worst 2-day pullback since the last time we had one that led to a 100-point rally in the S&P. I mean, come on, let's be honest about this. All this is a pullback to around the 10 moving average. And we had somebody here in class this morning, very first breakout this morning in the S&P, we had somebody in class who right here said, hey, should we go in and buy some put options on the S&P here, right? And what do you think my answer was? You were not in favor. Yeah, I was. Not only was I not in favor of it, I said, why in the world would you buy put options on something that's bullish? Now, understand, I'm not judging and I'm not preaching because I've made every mistake that can be made in the market, some of them twice just to check. I've lost a just ungodly amount of money buying put options on bullish securities. It doesn't work. You're trying to get ahead of the curve here. You're trying to, hey, I'm going to buy put. I'm going to be the first guy to buy put options, and this market's going to go down. I'm going to catch the very tippy top. No, you're not. No, you're not. No, you're not. Here's what's going to happen. You're going to buy your put options down here, and then the buyers that wanted to buy the market 3 days ago when it was trading down around the same price it's at now are going to come flooding back into the market and say, hey, I should have bought it 3 days ago and the market went up. I didn't buy it 3 days ago, but I'm not going to be stupid twice. I'm going to buy it here. They're going to buy the market, take the market higher, and you're going to lose money on your put options. So I made the point in class that when I see this kind of scenario and somebody asks that question, should I buy a put option, that I will actually go in and buy a call. We did it this morning. I bought call options here. I don't do it as a strategy to make money, ladies and gentlemen. Understand that what I do, I am doing to make a point, not to make money. Bought call options, and in short order, the S&P did this right here. Now, that particular little trade on 10 contracts of the SPX generated about $3,900 of profit at that point. The exit was right here on the engulfing pattern or the next candlestick when we started to trade below it, and you're out of the trade. Quick little day trade. The point is not the money that was made. The point is doing it when I did it, which was when? At the point when everybody started wanting to buy puts, myself included. right? I mean, if you look at this chart right here, how many of you guys just looking at just at this 5-minute chart? Pay attention to nothing else, just the 5-minute chart. Ignore the daily chart. If you see a 5-minute chart that looks like this, what are you going to think? I need to buy put options, and I need to buy them soon. This bad boy's running away from me. Guys, I'm the worst at it, right? I mean, we joke about it a lot, and oftentimes I don't show a lot of patience, and I can't help myself. When something starts running, I got to chase it. I was a cop for 13 years. Maybe it's that. I don't know. But when a stock starts running, I get the urge to buy put options, and I know that when that urge reaches its peak, when I become almost frantic, oh crap, I'm going to miss it, I got to buy it now, that is actually the time for me not to buy a put, but to take the other side of my own trade. Think about that for a minute. It's one of the most important emotion management tools that you can have. The knowledge to sense when your emotions have peaked and use that to trigger you taking the opposite side of your own trade. Oh, I got to buy put options. Oh my God, the market's moving. Oh, my palms are getting sweaty and my heart is racing and I'm excited about it. It's time to buy a call. What if I'm in put options and I feel the rush of excitement because I got in put options yesterday at the close for some reason, and now it's gapped down, it's going lower, and it's gone lower and lower and lower, and look, oh my God, look at all the money I'm making. This is awesome. I can't believe how great I am. I need to take the other side of my trade. I'm in puts. My emotions are at a peak. It's time to what? Start tightening my stops and be ready to get out of my put. Understand your emotions and manage them. This was the worst possible time right here to buy a put option because this happened. Very next candlestick, you have a bullish engulfing candlestick on the S&P, and we started to rally. Now, we've basically gone down to sideways since then, and that's very normal trading behavior, but look at where we are, guys. We're not even halfway through the trading day. We've recovered, and we're moving towards regaining that 10 moving average. If the S&P closes at or above that 10 moving average, is that important? Okay, a couple of you saying yes. Some of you look like you're confused. Let me help out. I will use crayons. Now, let me ask the question again. Is the 10 moving average an important area of trending support for this market? Yes or yes? Yes! Therefore, we need to be prepared if we bounce at the 10 to go in and be bullish the market. Does that make sense? Aaron, how are you? Aaron jumping in from the morning lab, joining a bunch of folks who were just with me in the lab, and we talked about this exact thing, right? And so we bought the call options on the SP. Nice little trade there. Again, didn't do it to make money, did it to make a point. When you feel that urge of emotion, look at the other side. Take the opposite side of your own trade, because here's what I'm going to tell you. Experts in the market, predatory traders, which you should be one. It's a lot of fun. The predatory trader in the market knows and understands human psychology and emotion, and knows that you and all the rest of the amateurs are all excited about buying put options or shorting the market here. So they're going to do what? They're going to take advantage of you. They're going to take advantage of you and everybody else like you. You're normal. You have normal emotions. Oh my God, the stock's going down. I got to buy a put. I got to buy a put. Oh, the stock's going down. I got to short the stock. Hey, it's going higher. I got to buy it before it gets away. They know that. They understand it. And they look for this right here. Big emotional sell-off. Smaller candlestick. Big emotional sell-off. Smaller candlestick with a wick. I'm in. I don't even have to think about it. And they will take the other side of your own trade. So you should beat them to the punch. S&P breaking down a little bit here out of a Bollinger Band squeeze play. May create some opportunities in the market. Guys, we looked at some really cool setups this morning. Couple of them that, well, let me show you guys one that we just crushed this. It was so awesome. We got out a little bit early. We bought call options on Netflix this morning, right? So right out of the gate, second candlestick in, stock breaks out, starts to rally above the previous day's close, we bought some call options. And the market took it higher and started going higher. And then right here, I bought put options. Okay, now we still had our call options, but right here, I bought put options. Who knows why? Failed to break out. Failed to continue to break out of the upper Bollinger Band. Now, oftentimes, all that does is move sideways to down slightly for a good bit of the day, goes into a Bollinger Band squeeze play, and then breaks out and goes higher. Okay? So what Marquet teaches is a fade into lunch. Okay? This is something that she started teaching at the first time I really saw it was just before the Phoenix event, at an event she and I were teaching live together, and then saw it at the Phoenix event, and it's in her DVD set. So we did a fade into lunch. We kept our call options because that was going to be a swing trade if we were able to break out above the 200 moving average. Yeah, we're in a little bit early, but that's fine. We had a 30-cent stop, did it as a value menu trade. Then we bought puts. We bought a higher delta put option to prepare for the possibility that the stock would do what most stocks do this time of the day, and that is to begin to move into a Bollinger Band squeeze play, which tends to move down. Tends to drift lower through the afternoon. At the end of lab, on this candlestick right here, we got out of our put. Okay? And we got out of that put with about a $700 profit. Now, our call option was a value menu trade, so we had 30 cents of risk, or $600 of total realized risk on 20 contracts on our call option on Netflix that we planned on being in as a swing trade for 3 to 5 days. What happened? Well, those of you in the lab who have been following along with the trade know what happened. It rallied and then it broke down, and now we've traded lower. So we have now been stopped out of our original call position. How much did I say we would lose if we got stopped out? 30 cents, $600 of realized loss. But because we did the fade into lunch and we got a short-term technical exit right here, we made $700. I was wrong. Couldn't have been wronger. Netflix didn't go up. It went down. But I had a trade on that was this fade into lunch trade that Marquet teaches that actually offset our losses, and we ended up making a $100 profit even though I was wrong. One of the problems that most normal people have trading in the market is that they are normal. And normal people want to be right. I used to be normal, but I fixed it. And now I want to be rich. And I would prefer being rich versus being right. See, I don't care if I'm wrong. Long as I'm doing the things that are going to get me where I want to be financially, it's irrelevant. Does that make sense? Everybody good with that? Okay. Now, the stock is building a really nice downtrend here. Is now the time to buy puts? Okay. I love this, and I don't know if Dean is in here, but Dean has a really cool rule that I shared with the folks here in San Francisco, shared with folks who were at the live event. In fact, Dean joined us in Tampa, and Dean is going to be speaking at the Success Symposium that we got coming up. Guys, we've got a wealth psychologist that we're going to be bringing in. She's phenomenal and is going to help you guys work through some of the blockages that are keeping that abundance from flowing into your lives, the amazing abundance that is available in the stock market that flows into some of our lives every single day and should flow into yours. And the only reason it doesn't is because you don't have the mindset for it yet. It's literally like a dam with a river. And until you remove that dam, you cannot get the benefit of the river. It's there. The water's there. It's on the other side, but you keep holding it back because you think things like, I've got to trade my hours for dollars. That's called a job. That's not going to get you rich. Nobody ever gets rich on a job. So you've got to think differently. So we're going to bring her in and give some examples and talk about some things, and it's going to be an awesome presentation. I've seen some of the video of what she does and just blows me away. Dean, my good friend Dean, is going to be speaking as well at that event on trading in a small account. He's doing some amazing things trading in a small account. And one of the things that Dean shared with us at the Tampa event that we just did, and I shared it with folks here in San Francisco, is a little rule that he uses intraday on the Bollinger Bands. Now let me ask you guys here in the Unplugged, how many of you guys would like to hear Dean's rule on Bollinger Bands with regards to intraday trading that has helped him create amazing profits in some of his trades? Jeff would. All right, very good. Judy, Linda, Paul, Dan. All right. So here's the deal. All of you who are saying yes, you'd like to hear Dean's rule, you need to get to the Success Symposium. I'm kidding. All right, relax. Y'all look like you're going to have a revolt in here. Here's what I'm going to tell you guys. And the reason I'm going to tell you is that, you know, obviously I'd love to have you guys there. A bunch of you are going. We've had a bunch of people sign up in the last week. You guys are waiting to the last minute, but that's okay. Whatever works for you. Signing up for the Success Symposium, come out and see what we got going on. And I would love to have you guys there, spend some time with us, learn this stuff. You're going to learn some great stuff. And he's had some amazing results. But I'll also share it with you here, right? And that does actually go against the conventional wisdom in our industry. The conventional wisdom in this industry, in this business, is to tease you with a little bit and then make you want to come back to learn more. But I'm a student, right? I'm a student of BetterTrades first, and I try to bring that perspective to my teaching. And as a student, I know and understand you. And I have complete confidence that if I teach you a strategy or a technique, I am completely confident in your ability to screw it up anyway. It's true story. You will. Okay? It's just, I mean, it's human nature. I will give you a rule. You will test it. You will break it. And then you'll come back to me and you'll go, I don't understand why trading's not working. I used most of your rules. Well, not most, right? So I'll share this rule with you guys, and here's what I want you guys to do. I want you to go out and I want you to test it and check it out and see what you mean. Pretty simple rule. What Dean taught me that he does is he will not buy call options at the upper Bollinger Band, and he will not buy put options at the lower Bollinger Band. Now there's one exception to that, and that's one that I am going to have him spend some time with you guys at and teaching you, because there's a little bit more intricacy to it, and I'd rather have you learn it from the guy who taught it to me than me teach you what he taught me. So at the Success Symposium, he's going to be talking about the exceptions to the rule. But as a general rule, won't buy a call option at the upper band and won't buy a put option at the lower band, which means it forces him. It's a rule. It forces him to wait for that stock to retrace and give him a better entry somewhere up here. So, it's at the lower band. It's going lower. I got to buy put options. No. Rule says I wait, can't buy them there. He waits for a retracement as the stock comes up, finds resistance, tweezer top right here at the 10 moving average. Anyone? Yeah, there was one. Finds resistance, gives him a good entry signal, then he will buy there, which means he's getting in at a better price with a tighter stop, which means he's got less at risk and more to win. I love that. That to me is just brilliant. Don't tell him. Is he in here? I don't want him hearing that I said it was brilliant. Thanks. Okay, so a question in class is, if you got in on the moving average, let's do it here. Let's do this. Let's back this up. I look at Netflix, and I got out over here, it rallies, and then it breaks down. I'm like, crap, I missed it, and it's going lower. I hate it when that happens. I would love to buy a put option, but it's at the lower Bollinger Band, and I've got this new rule that I'm using that y'all might have heard of. It's this rule that a friend of mine taught me. It says that you're not going to buy put options at the lower Bollinger Band, so I'm using that rule, so I can't buy the put here. All right, I'm going to wait. Well, that's not the place to buy it yet either. I'm going to wait. Nope, still going higher. I'm going to wait. Oh, look, there's a small wick up here. We recognize the 10 moving average. if I engulf, or what Marquet teaches you guys, what's Marquet teach you? Trades below that low end of that candlestick, then I will get into the trade. Next candlestick, what happened on the next candlestick? Right there, boom. I mean, hello? No, nothing, not a thing. Y'all not seeing it? Here, let me help you out. I will use crayons again. Did the stock, in fact, trade below that low right there on the next candlestick, yes or yes? Is it at the lower Bollinger Band? No. So can I buy a put here? In addition, did I have a tweezer top right at a 10 moving average? Yeah, which showed that the 10 moving average seems to be acting as resistance. Where would I put my stop? Good place to put would be right up here above the 10. And I would stay with that trade as long as we were below the 10 moving average and did not have some technical signal like a Bollinger Band bottoming pattern or some other signal that would show me it's time to get out of the trade. Does that make sense? Ken says, not only that, this pattern right here was one of the 4 entries that Marquet teaches to a falling 3 method candlestick pattern. Y'all, the most successful students that we have, I would venture to say, are the students who take what Marquet teaches in her DVDs and her trader talks and then practice applying it with me in the lab. Those are the students who are getting it. Those are the students who are seeing it. Those are the students who, is there a difference between theory and application? Right, I talked about it in class yesterday. I was a police officer for 13 years. I trained rookie cops not to get dead. That was my job. And they came out of the academy, thought they knew everything, and they thought because they were able to throw their partner on the ground at the police academy that they knew defensive tactics, and all of a sudden were judo experts. So I'd take them out on the road, and I'd tell them, go try that stuff with that big drunk guy over there, and he'd punch him in the face, and they'd fall on the ground, and then I'd go tackle the guy and arrest him. And they'd go, well, that never happened in the academy. Yeah, there's a freaking difference, all right? What you'll learn in a book is going to not apply all the time in the same way as it does on the street. The same thing here. And so what Marquet teaches is so awesome. It is so powerful. But you've got to practice with it, because let me just tell you, let me ask you, I'm not here to tell you anything. Had I not pointed that out, had I not pointed that entry out right there, that one right there, had I not used a crayon and drawn that out for you, be honest with me, how many of you would probably have missed that very subtle entry signal right there? How many would have missed that? Okay? I mean, you used to be one Marquet student years ago. Did she talk about it then? Yeah, so you would have seen this, right? It's one of those, once something's been seen, it can't be unseen. The problem is you may have to see it 100 times to see it. You're not going to see it the first 100 times. Okay, Ron saying he's a student of Marquet now. Ron, have you heard her say that before? Yeah, a little while ago, right? And if you hear her say it, and then the next day you're in the market and stuff's moving and the market's moving and CNBC's on in the background and the stock is moving and all prices are moving, and all of a sudden this happens right here, and you just don't click to it, do you? Anybody ever miss a trade and go back later and you're like, how in the world could I miss it? I know that. Anybody ever done it? Anybody ever miss a trade when you're looking at the trade? You're staring at the freaking thing, eyeballs wide open, you're looking at this thing, you're like, I'm ready, I'm gonna pull the trigger, I'm ready to pull the trigger on this. And as soon as it does what it did 10 minutes ago, I should have got, why didn't I get in 10 minutes ago? How could I miss that? Right? So if you've done that, you know what I'm talking about. Guys, I got a tip for you. Those of you who come just to the free class, you're going to learn a little bit of stuff once a week, okay? And I can tell you from personal experience how that's going to work out, because that's how I attacked my college education. I'd show up once in a while to the classes that I wanted to, that were scheduled in the afternoon when I was over my hangover. I would go to those. The other ones I didn't want to go, I'd go maybe once a week, once a month. I told you all the story yesterday about economics class. I went once at the beginning and once for the final. Well, I can tell you how that's going to work out. It's not. You've got to be exposed to this stuff, practicing with it, learning it over and over and over before it sticks. the older we get, the more Teflon our brain has, and the harder it is for concepts to stick. For those of you who look concerned, I was joking, all right? Your brain doesn't have Teflon in it. All right, so that's the Netflix trade, guys. Really, really cool trade. And again, love it because it's a trade that that Marquet taught us, helped us set up. Most of you know that Marquet is vacationing in Florida with her family. Jed, Marquet, the kids are all down there vacationing with Michael and Melissa and their kids. They do it every spring break, get all the kids together. I went down, spent a little bit of time with them at the Tampa event, and was wrestling, playing around with the kids and goofing off, and got them all spun up and wound up, gave them all sugar, and then I left. They appreciated that, I assure you. So now I'm getting pictures from them, and they're saying, say hi to everybody who is there, and we're on the beach. Here's a picture of the beach. And I'm like, y'all are not right, all right? That's just all I've got to say about it. So she wants to say hi to all of you guys. She would obviously love to be here. They've got zero signal out there. I don't know what it is about that particular area where they're at. It's a black hole of cell service and internet, and so not going to be able to be here, hang out with you guys. But she did tell me to tell you guys hi, and she sent me a adorable picture of Sydney walking on the beach, right? So I say it's adorable because she's not walking. She's running away from her mom as fast as she can. She does that a lot. So laughing hysterically, I'm sure, the whole time. So she did want to make sure that I told you guys hi. And Brian says, say hi back. Absolutely. Julie says, glad they're having fun. Yeah, definitely well-deserved. Marquet is an instructor who has always inspired me with her care and concern for you guys as students. What she does on your behalf and offers you great opportunities there. Christine says, I've been watching the Unplugged class on YouTube and watching the trend trading DVDs, and it's made a huge difference. I learned something new every day. Christine, congratulations on that. We were talking about it here in class. I had a really cool set of physical fitness DVDs that sat on my desk all winter, and I did not lose any weight. Amazingly, when I put them in the DVD player and actually watched them and did the exercises, lost 12 pounds and am in better shape. So yeah, you gotta freaking use them, all right? If you have them, break them out, dust them off, put them in the DVD player. In fact, nowadays, you may not know this because it's been so long since you used them, your computer actually has a DVD player in it. So take advantage of it. Use them. All right, let's see here. Julie says, you both deserve it. I took a vacation once. I did that. I remember that. I believe it was 2009. Took a vacation for an entire week. It was the very first week that I took over the front-end operation for BetterTrades, and I left for Cancun for a week. That was now, I say that. I mean, I shoot competitive matches, and those are my vacations now, right? So my wife's like, what? You don't have a hobby. You can't have a hobby, can you? What she's talking about is every hobby I've ever had turns into what? Competition. I got to win. I mean, I just, the way it is, I can't do something. To me, the fun is in the competition. The fun is in the winning, right? And I have a saying that I just love, and I think it was Tony Robbins who I first heard it from, that says, I will win, period. And then the next sentence says, perhaps not immediately, but eventually. That has been my guiding principle in trading and everything else, guys. And one of the things I try to do is to provide motivation and inspiration, because somebody provided it to me at one point in my trading career when I was at my lowest. And I was so touched by that and so inspired by that, that it had a big part in me deciding to become an instructor and teach. Because if I can motivate, if I can inspire, if I can help you in some way with the spoken word, to stick to it, to stick with it, to get involved, to get the education, to get plugged into the system, to not give up on something that can literally change your life, and that the only person standing in the way of that happening is you. That the only way this is going to happen for you is if you change you and how you think. But if I can motivate you to do that, if I can inspire you to do so, that you will literally experience a far greater and more abundant life as a result. right? So the things that we teach you are important. The candlestick patterns are important. The risk management is important. The strategies are important. But what is most important is the person that you become in order to attract the wealth that can flow into your life from the stock market. Brian says, I bought an Apple 17 call for $9.60, running on the top of the Bollinger Band. Not an ideal entry, just wanted to watch it in my practice account. Brian, one of the things that I encourage students to do if they are funded trading, and this is only if you're a funded trader, but let me just ask the question. How many of you feel like you are better paper traders than funded traders? How many of you guys feel like you do really good in your paper trades and not so well in your funded trades? Because funded trading is different. How many of you, anyone here? No, y'all are like just as good, or you're not paper trading. Okay, gotcha. How about here in the lab? Most definitely, Christine says. Moi, Kim says. Steven says paper is easy, right? You get to the funded stuff, not so much. Bruce says, I am a paper trading expert. Love that, all right? So there's your affirmation for the day. Now, Bruce, how about if we do an affirmation for the funded trading? I am a funded trading expert. So what is the difference? Why the difference between paper trading and funded trading? What's the difference? Emotions, okay? Which emotion? Fear. Fear would be the emotion, right? So fear is the emotion. What are you afraid of? Timing. I'm hearing losing money. Somebody's saying that fear and greed runs the market. Absolutely not. Fear runs the market. Fear of loss and fear of missed opportunity is the one and only emotion that runs the market. It's fear. Greed is nothing more than the fear of missed opportunity with regards to a definition for the market. That's not the actual definition of greed. Okay, fear with real money. You're afraid of losing the money. All right, let's visit that for a minute. How many people here in the class today, either in San Francisco or in Unplugged, when you trade with a stop? You buy a call option or a put option, and you put in a stop. How many people do that, okay? Some of y'all's answers just kill me. Okay, so most of you, okay, some of you, all right, the rest of y'all are either not trading with a stop, which is interesting, or you've just given up on trading altogether, which makes me wonder why you're here. Okay, so must have a stop, Brian says. Ray says, me, yes, trade with a stop. Okay, so just so that we're sure we understand each other, let's do this. You go in and you trade with a stop. You go in, you buy a, we could talk about that trade. That's such an awesome trade. It's just crazy. We did a trade this morning, guys. It was a volatility swap that was just so cool, and Clayton is the one that caught it. Stock's trading at $63 a share. You think the stock is going up. You buy to open the 65 call option, and in the money call option, and you buy that call option for $3, and then you put in a stop. I don't know, maybe you work out the stop, you work out the numbers, and you realize a drop below the moving averages would move your option price from $3 to $2.50. So you put in an order that says to sell at $2.50, and that is your stop order, right? Is this what we mean by a stop? Those of you who are telling me you trade with a stop, is that what you mean? Is that what everybody pretty much means, right? You buy an option at $3, you put in an order to sell it at $2.50 if it goes against you. Yes? More or less. Okay? I mean, that's the idea. Maybe your stop is bigger, maybe your stop is different, but that is the idea. We're going to sell it at a loss. Everybody with me? Okay. So when you get in a trade, you're going to sell it at a loss, correct? Well, I mean, if it goes against you, you're going to sell it at a loss. Okay? Everybody with me? Yeah, okay, all right. Yeah, I mean the 62.50 down here. Thank you for catching that. So this option would not be, I'll do it this way. Julie taught me how to do this. Gone, never happened. Like it was never even there. You never saw that. It never happened. We bought to open the 60, we're going to buy the 60 call. And that one's going to be, let's say it's an expiration day trade, it's $3. All right. So now, if the stock goes against you, you are willing to lose 50 cents if this goes against you, and that's just the price you've got to pay for the opportunity, correct? All right. So remind me again, why are you afraid? What is it that you, it's not a fear of loss, all right? We just mathematically proved that you are not afraid of losing. That's not what's causing you a problem in your paper trading account, or your real account versus your paper trading account. That's not causing you the problem. It's not a fear of loss. If you are trading funded trades with a stop right now, you are fearless of loss. You have no fear of loss. You accept the loss. You accept the risk of 50 cents on this trade. So it's not a fear of loss that's causing you the problem on your trades. It's not. Okay, somebody in class here saying it's a fear of success. I like that. How many of you feel like it is a fear of success? Now, obviously, well, one person is going to say yes. I thought nobody would say yes. I thought all you all are like, that's ridiculous. Nobody's afraid of success. The number one fear that people have, one of the number one fears that people have is public speaking. Y'all know that? That it's actually the number two fear in the list of fears people have is public speaking. Okay, why? It is the fear of being up front, everybody watching you, the fear of being vulnerable and visible and being different. Given a choice, the vast majority of people in society would rather be in the crowd than on the stage. Is that a pretty safe bet? Yeah? That's what you're afraid of. You're afraid of standing alone and being exceptional, standing in front of your friends and being judged. You're afraid of being different. You're afraid of being alone, which is what will happen to you when you become financially successful. When you step away from the crowd, the people you now call your friends will talk behind your back. The people who are your family will judge you for going against your values. The people who you call your coworkers will now be your employees. You are afraid of success. Let me prove it to you. You get in the trade, you put in your stop because you have no fear of loss, and the trade now goes in your favor. Hours later, your $3 option is trading at $5.50. The stock price has rocketed higher. The stock has now moved to $66 a share. Or $65.50. Let's go there. Let's just say it's an expiration day trade. Stock's trading at $65.50. There's still hours left in the market. Be honest with me. You got in a trade yesterday, you got stopped out, you lost 30 cents. You got in a trade the day before, you got stopped out, you lost 50 cents. You get in a trade the day before that, you get stopped out, you lost 60 cents. You get in a trade today, it finally goes in your favor. The option price goes from $3 to $5.50. How many of you would get out of this trade right here? You got $2.50 of profit. You've been crushed on the last 4 trades. How many of you, be honest, would get out here? 1, 2, 3, 4. I haven't even given you a reason to get out. Didn't tell you a swing trade, day trade, nothing. I told you there's hours left. It's an expiration day trade. Joseph says depends on the charts. Okay. Ray says me, possibly. Kong says me. Wayne says it turns into a risk-free trade. Aaron says not enough information. Okay. For those of you that say not enough information, that's fine. You got $5.50. You got $2.50 of profit. Here, let me help you out. You did 10 contracts. You got $2,500 of profit. You lost on the last 3 trades. No? All right. You did 20 contracts. You got $5,000 of profit. You lost on the last 3 trades. No, still not. You did 100 contracts. You're up $25,000. You lost on the last 3 trades. At some point, y'all are going to start saying, yeah, if I had $2,000 or $5,000 or $10,000 or $25,000 of profit, I would probably get out of this trade based on the profit. And here's what I'm going to tell you. I asked you guys to be honest. Some of you undoubtedly are. Some of you are fudging the numbers. It's okay. It's the political season. The truth of the matter is, if you will look yourself in the mirror and you will be honest in your reflections, you are very likely far more often getting out of your trades based on profit and not on the technicals. If you were getting out of your trades purely on technicals and getting in your trades purely on technicals, we probably wouldn't be having this discussion. The fact of the matter is, most traders that I meet in BetterTrades have the problem of getting out of good trades far too soon. That, ladies and gentlemen, is a suppressed fear of success. It is a symptom of a suppressed fear of success. It is, I would rather be in the audience than on the stage. I would rather be normal than exceptional. I would rather be comfortable than wealthy. And I'm going to challenge each and every one of you here today to look at yourselves honestly. Would you rather be at the front of the room, on the stage, or in the audience? Would you rather be normal with the group or alone and exceptional? As Zig Ziglar used to say, would you rather cluck and peck at the ground with turkeys or fly alone as an eagle? It's your choice. Look honestly at why you do what you're doing. If you're not making the big money in the market, it is because you're doing one of 2 things. You are not letting the winners run, or you are not cutting the losers short. Because if you will do that and trade off of the technicals, let the technicals tell you, wow, so number 1.
Yeah, it's number 1. I thought death would be number 2.
I did too. Brent just showed me a list here. The top 10 human fears, the book of lists reports, number 1 fear, public speaking. Number 2 fear, heights. Bugs. Julie says, you never know how and when you're going to find that little piece. You never know how and when you're going to find that little piece that explains your behavior, right? It's not comfortable, guys, and I'll tell you, unless you were raised by wealthy people, you were raised by people who could not teach you to be wealthy. True story. So if you want to be wealthy, you've got to start hanging out with people who can teach you how to be wealthy. It's not a comfortable process. It's not. It's an extremely uncomfortable and at times painful process. I will compare to the current physical fitness regime that I am being subjected to by my personal trainer. That guy's trying to kill me, I swear. But without pain, there can be no growth. If you're not where you want to be, you need to take a real hard look at why that is. The trading is there. The opportunities are there. Somebody earlier said Amazon was looking interesting. Bounced right off of the 10 moving average. I love that. That's awesome. Could look at it as a potential setup, and we probably will look at something on it here in San Francisco. But I want to spend a little bit of time here with you guys today, and given the fact that Marquez is not here, use this as an opportunity not only to show some trading opportunities, but to show some of what we're going to be covering at the Success Symposium with the wealth psychologist that we got coming up, who's going to talk about these exact factors. These are things that you have to deal with if you're going to get there. Guys, it does you no good to know how to trade in the market if you don't trade in the market the way you know how to trade. Y'all have learned the ways to trade, but you're not doing it. We gave you all a set of rules, the very first Market Essentials you came to. Most folks that I talk to when I go to events can't remember that set of rules. It's been so long since you followed that set of rules, you can't even remember the rules. You're not trading the way you were taught to trade. You're not trading the way that works, which is to let the winners run and cut the losers short. Yes, there's a lot of information inside that. I showed you some nuanced entries and exits, some things that we did on Netflix today, but that's just information. That information is useless if you don't apply it. And you won't apply it, and you won't apply it correctly if your soundtrack in your subconscious mind is constantly pulling you back to think like a broke person. Got to change the soundtrack. Got to change the affirmations. All right, guys, that kind of brings us to the end of our time here. Let's see, got out at 450, nice, would sell half your position. You know, it's interesting when people tell me that. Given the absence of any technical indicator on this little trade that I set up here for you guys, didn't tell you anything about technicals, and I got a lot of answers from people who said, I would sell half of it. I would tighten my stop. I would get out of it. All three of those are the wrong answer. Given the information I gave you, all three of those are the wrong. There is no reason, based on the information I gave you, for you to get out with half, or to tighten your stop. All of those are symptomatic of broken thinking, or broke thinking, right? A fear of being in the front of the room and alone versus being in the audience in a crowd. There's no now, if I said this is a day trade and we have a Bollinger Band topping pattern on the stock, heck yes, I'm out, done. There's a reason. It wasn't the $2.50 of profit. That was not the reason. Profit is never, ever, ever, ever a technical indicator. Profit is never, hear me, profit is never a reason to exit a trade or adjust a stop. By itself, it is never a reason to manage a trade. Let me read the rest of your comments, and then I am going to get back to teaching here in San Francisco. I was excitedly looking at my clock here because I was like, whoo, it's almost time for lunch. It's freaking 10 o'clock here, all right? I mean, I wouldn't wake up until now under most normal circumstances. Let's just see here. Psychology, I am too risky. Law day trading, Wayne says, must use options in my credit spreads have limited risk. Wayne, be careful how you interpret risk, okay? Careful how you interpret risk. I am not a big, this may surprise some of you, I am not a fan of credit spreads, okay? Not a big fan of credit spreads. Anybody know why? Limits your upside, number one. But more importantly, okay, what did I say yesterday? And those of you here in the Unplugged class, you might want to write this down. You need to know that professionals focus on risk and amateurs chase profit. Professionals focus on risk. Amateurs chase profit. So let's evaluate risk. I sell to open the 100 put option. I bring in $2 for doing that. I get paid $2. Awesome. I'm going to mitigate some of that by jumping in and buying to open the 95 put option for $1. This is a bull put credit spread. And what people will tell me, what people told me for years, Bill, as long as this stock stays above $100 a share, doesn't matter if it goes up, down, or sideways, you're going to make $1. Awesome. So I do that, and I make $1. I do it on week number 1, and I make $1, right? Does everybody see the dollar credit that I'm bringing in here? I bring in $1 credit, and I make $1. All right, there's my $1. The end of the week, I take that $1, and I go and I put it in the bank. And I do the trade again. And as long as the stock goes up, down, or sideways, I get to make $1. Awesome. I'm now in week number 2, and the stock went up, down, or sideways, did not go below 100, so I get to keep the $1. I take that $1 and I put it in the bank. I am killing this. I've had 2 trades in a row that went in my favor. I'm crushing it. I'm amazing. I am phenomenal. This whole credit spread thing, this is good because I've got $1. I'm bringing in $1. I'm doing it again. I do it the third week. Holy cow, look at this, 3 in a row. Oh, my God. I mean, I am like a trained killer ninja credit spread trader going on here. I got this stuff going on. I'm going to do it again. I jump in and I do another trade. I bring in $1 and the stock goes up, it goes down, it goes sideways, and then right before expiration, it goes here. What just happened? I'm not going to get $1 this week, am I? Not only am I not going to get $1, my dollar counts against the $5 of risk I have in the trade, so I'm not going to lose the full 5, but I am going to lose 4. Well, crap. At the end of the week, I take that $4 loss, and I go over here and I put it up against the $3 that I made. I've been trading for a month, and I'm down $1. I do not like these. I hate these. Single-sided credit spreads are my least favorite strategy with one exception. And that one exception occurs on expiration day, and y'all should have went to my class, Terminal Velocity, to learn how to do that. Now, don't cry in your Cheerios. I did record it on DVD, and it is available. Give us a call. We'll be happy to get it to you. Question, David. So David's question is, if I considered doing another live Terminal Velocity class, I've actually had half the class ask me to do it again. Now I'm traveling around, people like you are saying, I would love to trade with you live, guys. Terminal Velocity, I traded for an entire day on expiration day, and we crushed it. It was awesome. You should get the DVD. I don't know if I'm going to do another one or not. It was an entire day, right? I can't sit still for an hour. Y'all have noticed that? This was an entire day. It was killing me. I will consider it. All right. Ladies and gentlemen, we have spent an entire hour together. All right, that'll teach Marquette to take a vacation. Right now, she's going to come back. She's going to be like, "What did he tell you? What did he teach? What do I need to fix?" Right? And so, some good stuff here. Scott says, "Thanks for the class, Bill. Good info. I too am a Tony Robbins fan for mindset and for workouts. Recommend the Body Beast DVDs." Yeah, you know, I've done the P90X. I've done the T25. They were tough. I'm doing the one from Tap Out, which is the mixed martial arts guys. I now understand why those guys can do the things that they do, because of all the workouts I've done, it's brutal. But it's a lot of fun because you're moving around, and what the heck, you're learning some fight moves at the same time. All right, guys, I appreciate the opportunity to hang out with you guys. I am not in Baltimore next week. Rob is in Baltimore next week. Look forward to seeing you guys at the next Unplugged, and more importantly, look forward to seeing you guys at the next live event. It's not too late. If you're in the San Francisco area, come on out. We're all here waiting for you. Ladies and gentlemen, I appreciate the opportunity to hang out with you guys. Look forward to doing it again in the very near future. Until then, I wish you guys all the success in the world. Godspeed, God bless, and I'll talk to you guys at the next live event.